This is David Patrick, Fitzstock Charts, market video update for January 9, 2019. We are going into a 4-day uptrend. 90% clubs growing. Still looking at 2008 historical chart pattern comparison, and we hit the 2600 brick wall in the S&P 500. So now what? Well, we get 2 to 3 good uptrends per year on average. Last year we had 11. We were spoiled last year. That's not normal. We had a huge year last year. We preserved capital at the end of the year when we went in a downtrend. But what do we do now? Oh, we'll talk about that in a minute. 90% club, we have 15 different January options in the 90% club. We just had some spiders that I put on. I posted as a supplemental trade idea in one of my live trades on Twitter early this week. And those options went up 130%. 130%. Amazon calls 92%, Splunk 113. And it's not always just about the 90% club. These are the stocks that engaged recently on the ESFL. 29%, 72, 60, 38, 30, 55, 73, 72. That's not chump change. What that is a proven methodology that works. We talked about being patient and waiting for the uptrend, waiting for, more importantly, rules to engage. Price above the 10 SMA. You can get long versus the recent lows. Yes, the risk reward was not that compelling. It doesn't matter. It's an uptrend. You allocate risk that meets your risk profile. You allocate the amount of long risk exposure. I want to look at the 5-minute rules of engagement. We just the 90% compares 2008. Talked about that. Bear market 2600. Okay, a couple things. So, well, first of all, let's talk about the historical chart pattern comparison. Right here on the left is our current Dow Jones. We use these Fibonacci retracements. We compared it to 2008, which is on the right. And what did we say? Now, this is the Dow, it's not the S&P. We said we were going to get between the 38 and the 50% fib before the next real pullback. And that's if there is a pullback, because we never predict that. We're never going to make yearly predictions where the stock market's going. You're going to prove yourself just like, if I have tried in the past, to me it's ignorant. If you're trying to predict the future, it is a 50-50 odds. So you're making yourself not look intelligent because you want high odds. We know rules of engagement and uptrends. We've batted well over 750 since we launched the service. Those are the odds that we want. Guessing, predicting the future is not how we trade. Now, we do have obviously calculated entries, defined risk, but we have a roadmap. Let's call it a roadmap rather than predicting, because we have a roadmap scanning hundreds, if not more, which is what I do every day, charts looking for pattern repetition. Well, we found it. We found it with 1954. We found it with Panic in 1907. We found it with 2008. They all indicated we were at least going here. So you didn't have to get we didn't have to get these lows. And let's change things real fast because I want to talk about something else also. Let's change this. All right. You don't have to get these lows. This whole way down is a downtrend. If you tried picking a falling knife anywhere in here, you got destroyed. And by the time this market reversed, you had no idea what to do. You're a deer in headlights. Now, I do want to address one thing. We went into an uptrend right here, right? And we talked about not all uptrends are created equal. Well, that uptrend ended up being a 2-day uptrend that failed. And that happens sometimes. And we talked about the most important thing in trading is risk management and putting your stops in when you're wrong. You can always get back in. At that point, we didn't know if we were going to new lows and then some or what. But we did know if this market turned around and saw price strength confirmation, you have to get back long because that was the shakeout. You had rules to engagement that next day, back above the 10 SMA, you took this out for price strength confirmation. I got long my spider calls, and they well over doubled. Now, I don't have that long allocation like I had back in 2016 when I said I was going all in, and I did go all in with triple longs. So I was leveraged long back in 2016 right in here. Most of you have been with the service for a while, but right back in here I'll highlight. Why? Well, the higher time frame told us to, the weekly. The daily broke a downtrend line, a bull flag above, we saw the MACD bull cross. That's our number one trade. All the stars were aligned. So if we get out of the market, let's just say you did what I did and you got out of the market when we broke this uptrend line. So you get out at 2,900. Oh, that's the Dow Jones. Sorry about that. Let's change this up a little bit. Let's say you got out at 2,900. Because once again, there's a lot of people that didn't get out. Some people just want to be long the market in their 401ks, which is fine. You have to be comfortable with all your trades, all your investments. But when we break a long-term uptrend line, which we did, I went all cash. So if I'm cash, let's just call it 2,900, all right? If I'm all cash from 2,900, I don't feel like I have emotions when we come down here that I have to get these lows, right? There's no emotions because I got out at a pretty good price. What I do have to capitalize on those, it's a 4 or 5 day uptrend. Here, right? 3 4 day uptrend. Here, 3 4 day uptrend, which I did. But at least the way I treat it is I don't have to go all in like I did back in November 2016, because guess what? All the stars are not aligned. It's not the same conditions, right? We saw the bounce we wanted to. It bounced off the 200 SMA and we're ripping. But when we look at the higher time frame, which is always in charge, you're still below the green line. That's the 10 SMA on the weekly. 2616. You would have to close above that just to go back into no trend. And then obviously the next week close above that week's high. So can that happen? Absolutely. But it hasn't happened yet. So if it hasn't happened, I don't need to be 130, 140% long market exposure. I'm comfortable with 10. I'm 10 in fixed income, 10 in the market, and 80% cash, because the 5-minute rules of engagement, and once again, you don't have to focus on being a day trader, but the 5-minute ROE trades are home runs. I mean, we're hitting it out of the park. And I'm telling you right now, don't get used to this. Because as much as the 5-minute rules of engagement work, I can tell you they are not going to work as easy as they've done the last 2 days. I mean, it will never get easier than it does the last 2 days. I can tell you that right now. I mean, these are just, you took no heat on these trades, none. On these different long entries, on the short entries. I don't know if I can draw this. For some reason, it doesn't want to draw the trend. I drew this morning. There's a nice short entry here. You got paid. You get stopped, and then guess what happened? You stopped in your runner, and you bull flagged above a downtrend line, above the 10 SMA with MACD, and now we're breaking into highs, and we talked about 2,600 being the bogey. So, I mean, that's 15 handles right there. And on the way down, you probably got 10. Maybe you got 10 of the 25 that we sold off. I can't tell you enough. Number one, those are home runs. And number two, I guarantee you it's not going to be that easy as we get closer and closer to earnings season and more economic numbers come out. It won't be that easy. So I hope that you capitalize on this uptrend. I hope if you were aggressive, you capitalized on this 5-minute rules of engagement, because this is the easy part of trading, right? The hard part is the risk management, putting your stops in, or if a trade doesn't go well and you get stopped out at a loss. That's the hard part. This is the easy part. You have to be making money in this environment because it's easy. But as we get back to the daily, so yeah, we do have a ton. This was support. All right. Let me see if I can draw it here. So that's going to be some resistance. You have the 50 SMA. If I had the Fibonacci, that's the 50% Fibonacci. You have a ton of resistance. That does not mean you can't go through. It just means now, if you're getting along now at 2,600 when you should have been long, let's say 2,480 to 2,520 in there, you get long up here, that's a very difficult trade. Now, I can't say that's going to work or not work, but if you thought the risk reward wasn't worth it here, it certainly isn't there. So you don't have rules to engage to go short. Keep riding the uptrend until it stops. But we've looked at 1907, 1954, and 2008. And this pattern we're seeing right now has been identical. And I also want to emphasize this pattern we're seeing right now will diverge. Okay? It might diverge this week. It might diverge next week. It might diverge next year. All patterns diverge. All historical chart pattern comparisons we've been able to capitalize on. We've hit it out of the park with. And then they diverge. They go just a different way. And then we look for a different historical chart pattern comparison. So we hit this one out of the park. Now what? Well, now what? I don't know. We're going to wait. We're going to ride this uptrend. You could be 10% long. You could be 110% long. That all matters with your risk profile, right? Ride the uptrend. Allocate more long risk exposure if that meets your risk profile according to our focus list, which is the ESFL that comes out every day. All right. I think that was all. I think I just want to emphasize one more thing. I said, when do you get, I think the hard part, the easy part was this last couple of days. The hard part is when you exit on 2,900, where do you get back in? Because your emotions, it's hard to fight those emotions because you want to get cheap prices. But just simple, wait for the rules. Now, we just saw the rules didn't work that one day. What was it? January 1st. Okay? They didn't work that day. You got stopped. No big deal. But there's no methodology that works 100% of the time. That was the first time that we went in an uptrend that we didn't get paid in a long time. And that was because the higher time frame was telling us, be careful, right? Now, we're in an uptrend, ride whatever you're long infinitely. If we go to new highs, you better stay long versus your entry, which is now your stop because you've already scaled. All right, let's fly through the charts and see what we got going on this S&P 500. A lot of these indexes are going to look exactly the same. NASDAQ getting real close to the 50 SMA, which obviously is huge resistance. Oil getting close to the 50 SMA. Financials lagging a little bit. They're nowhere near the 50 SMA. IYT transports. These are all, witch hat bottoms. They're going straight up, V bottoms. I mean, massive moves. A lot of these triple ETFs are up 30%. 30+% off their lows already, which is crazy. Gold continues to grind higher. Bonds, looks like they broke an uptrend line, which I thought would happen. I also said they can come back down here to 118, somewhere in this area. In fact, they might even try to fill this gap, and then they're going to reset up long again. And by the way, if we come down here and we do fill this gap, and then we get back above the 200 SMA, I'm probably going to get long those U.S. Treasury strips or possibly some TLT. I'll put 10% more. I already have some in fixed income, but those will go directly into bonds or TLT if we see that kind of setup. We saw that kind of setup, I think, in 2014 when I went long bonds. So I'm letting the bottoming process happen, which obviously has already happened. But as we drift lower and we get footing and we start the charts improve even more, I'm going to allocate 20% of my account, which is what I did back in 2014, shortly after we launched the service. Okay, what else do we have here? Look at gold. UDOW, yeah, that one's lagging a little bit too. Looked at the SPO, let me see, XLE. Okay, I think we looked at all those. So let's fly through the stocks. So, what have you done for me lately? Well, Apple has basically crashed. I mean, it went down $90. It's over 30% when it is in a bear market. That doesn't mean you can't get long when you have ROE. And you finally do have ROE. Okay, so the problem with this trade for a long is you're coming into a gap. And when you come into a gap, what happens usually is you stop. Once you get in that gap, you stop and you come back down either to a double bottom or a higher low before you set up for a better long opportunity. So this one's a very difficult new trade to get long. I do think we come and fill this gap. And it might be on the ESFL. I won't be taking it just because I think there's better trades out there. But with that said, it finally has ROE too long. Amazon has just been on a tear. It's hitting the 200 SMA or close to it. That is obviously huge resistance. Netflix is getting close. Booking, that looks like it's heading back down. Expedia, drifting a little bit lower. Tesla. It does not give us any direction. Roku is very interesting. So this is a break of a downtrend, and this one's been on the 90% club a lot. We haven't traded it lately much. So yeah, this is a bull flag above a 50. Now the big problem with this trade is you have a massive resistance at 200. So although this probably will set up long if it gets back above the top of the flag, the problem is that 200 SMA could be some big resistance, so just be pretty careful there. All right, NVIDIA. Oops. Bull flag above a break of a downtrend. MACD looks good. Intel, same thing. Get a double bottom. Maybe we come back for the V. Tough to say. Texas Instruments still looks bullish. The market still looks pretty good here. Micron, AMD, SMH in general is getting close to resistance. OLED and Avgo. Yeah, I don't see a whole lot of momentum there. Let's look at some software stocks. Microsoft coming back up to close to that death cross. Oracle, that's a bull flag above a break of a downtrend line. That one could be setting up. If the NASDAQ does want to break above the 50 SMA, Oracle looks decent if it shows price strength confirmation. Workday, CRM, Jobs, they all look decent. They've come a long way. FF5V, Adobe, they've come a long way. Team, SQ, PayPal look like it wants new highs actually, which is pretty crazy. Facebook back above the 50 SMA. It's amazing how bad these stocks looked 10 days ago and how good they look now. And that's why you have to keep an open mind in bear markets. You can't fall in love with the short side. Very, very important. Google, breaking the downtrend line, bull flagging above, looks okay. Twitter had a nice payday for us off the ESFL. Snap. Snap might want higher. It's taking its good old time, and I just don't normally like stocks under $10. We'll continue to monitor that one. Not in love with it. Baidu, payday. I'm sorry, Baba and Baidu both look pretty good. Baba did, I think that's up 70%, those options, since we put those on. Cena, YY, NTES. NTES looks really good. Sohu. What was another one? Oh, Momo. Yeah, I'd say Momo actually looks pretty. Oh, Shop looks good. NTES. Shop and NTS look probably the best of that group we just showed you. Do we show GoDaddy, Visa, MasterCard look both ripe to continue to grind higher? JP Morgan, Bank of America, Citigroup. Yeah, I mean, these banks might play catch up. But you got to remember, they do have earnings. Earnings season starts next week. So make your money this week. And before those earnings start to come out, it's going to be, I wish I could rewind the video I'm doing right now. In fact, I probably will. It will be more difficult during earnings season. Promise you. Make your money now. ICE, CME. Wow, CME has actually been pretty weak. That's very interesting. It was the big leader last year. CBOE grinding lower. Flip the energy. COP. Wow, recapturing the 50 SMA. PSX, ExxonMobil, CVX, Rig, Schlumberger, yeah. Oxy, Marathon. I don't see any huge... I think this PSX, if it gets back above the 50, will be interesting. And that COP, obviously, that looks the strongest out of all those energy stocks. Go to cannabis. Tilray's interesting. Breaking a downtrend line. We really need it above 100. Whoops. Above 100 seems to interest me a little bit more than where we're at right now. I don't know why that just happened. But you can see the break of the downtrend there. Bull flag above. We have resistance at the 50. And Canopy. Break of the downtrend, bull flag above, Yahtzee. That was not on the ESFL. I think we talked about it on the video, but that was a nice setup if you took that one. Nice payday there at Canopy. Let's flip over to the casinos. Wynn, Las Vegas Sands. They all look good. And once again, these stocks looked horrible 10 days ago. We switched tunes. And we talked about when the market got knocked out of trend a few days back, some of these ones stayed in uptrends, and the casinos were one of them. And we talked about that. Some of the biotechs also. Amgen looks good. They stayed in uptrends when the market got knocked out of trend. I think it was January 4th. Jazz. Gilead, have we talked to Gilead in a while? REGN, aluminum. They look like they're losing a little bit of momentum. ISRG, that's interesting. Break of a downtrend, bull flag above. That one actually is setting up. So that's like the third or fourth stock that actually is setting up, and you might see that on the ESFL. I think that is going to be it here. If I can type correctly, yeah. These stocks, most stocks have just absolutely ripped. And we were all over the ripping using the historical chart pattern comparison to 2008. And we said we would get between the 30 and the 50. And then we said 2,600 is mammoth resistance. That doesn't mean we can't go through it, but it is a brick wall. And as we get up through it, you either want a bull flag above it and keep going, which would be great, or obviously we have to watch for a break of a previous day's low that reverses us back down. And I'll be honest with you, as much as I love historical chart pattern comparisons, I'm not predicting that we're going back here just because we did in 2008. I'm going to watch it. I'm going to keep an open mind, and I'm going to remain bullish because we're in an uptrend. Now, I'm not negating the fact that the higher time frame is bearish, but I am always bullish in uptrends, and I'm always bearish in downtrends. And right now, I remain bullish. I'm focusing on longs, on all these ES 5-minute rules of engagement, which are paying us a fortune if you're day trading. If you're not, your focus is what? The ESFL, the 90% club comes from the ESFL. Here's the ESFL. Those are the kind of returns that you're getting, and some of them turn into the 90% club. That's all I have for you on the market video update. Have a great day.